Very good evening, friends. Rather, I would say it is good morning. First of all, I would like to wish everyone, all our subscribers on YouTube, Facebook, Twitter, LinkedIn, WhatsApp, Telegram, everywhere and across the globe, a very happy new year. So, today is practically 2nd January 2021, and I would like to wish everybody a very great and happy new year. And here I would like to have a 15-20 minute sessions for our subscribers, our viewers, our YouTube video and everything. First of all, I'm very pleased to share that Treasury Consulting Group News Desk is live, whereby we are sharing the exclusive news with the subscribers. This news desk is, created in such a way that it is visible for everybody. So it is just 260 rupees per year. So either you can opt for Telegram news desk or you can go for WhatsApp news desk. Either of that is available. And it is live. More than 150 members are utilizing that service on different platforms, WhatsApp and Telegram. Our TRFX Academy, which is OTT platform, is also live. Our video trainings also live, and now we are launching many more products, probably in another 1 month from now. If you wish to subscribe any of that, you are definitely welcome to WhatsApp at 9818485155. 9818485155. Now I would like to share my message. We all know that how 2020 passed. Several million jobs cuts across the globe. According to the International Labour Organization, only in the Asia and the Asia Pacific region during 2020 COVID, around 81 million jobs cut. And I'm pretty sure that these number of jobs would continue to cut in 2021 as well. With due respect, I feel that 2021 would be more volatile and swing year than 2020. And especially when the new variant of COVID-19 is right before us. According to the public statistics, around 32 plus countries already confirmed that new virus, and unfortunately this virus is now around 30 plus cases we have in India as well, and that too according to the public sources. We really need to appreciate that all the retail investors need to be very careful, because markets can crash at any point of time. Like if I look at gold is currently $2 less than 1900. So Friday was a holiday for international markets, so no trading in gold. Today is Saturday, tomorrow is Sunday, so no trading in gold. Tomorrow, basically day after tomorrow, on Monday when the market opens, we will see the trading of gold, and you will see that the gold will breach 1900. And if gold will breach 1900, then I'm sure that the next destination of the gold is 1950 and maybe 1975 also. Silver is also trying very hard to breach 27 level. If silver will breach 27, then I'm sure that silver would be moving to 28, maybe more than that. Globally, aviation stocks, hospitality stocks, the real estate stocks all are falling except India. Indian markets are moving the one side, and our beloved Hindi media is giving a kind of excuse that the foreign institutional investors are pumping a huge amount of money. Well, the time would be telling whether foreign institutional investors would continue in the Indian market or not, but one thing which is definitely a surety, that the day foreign institutional investors quit, Indian market would definitely be a big history, and we will see a huge crash in the Indian market. That is really very important. All retail investors needs to be very careful in 2020. But today is 2nd January 2021, and very soon we will start talking about the geopolitics also. And geopolitics always play a very important role in the markets. And China already confirmed that they would be making yuan the most powerful currency of the globe. And I'm sure that if there is a requirement of devaluation of Chinese yuan, assuming it is required in 2021, then Chinese will not hesitate to do the devaluation of Chinese yuan. I don't know how many of you remember or not, but in 2015-16, when Chinese did consecutive devaluation of Chinese yuan, then how market fared? It was all red, red and red. I will not be surprised probably in 2021 Chinese will do another round of devaluation to make sure that yuan would be the leading currencies of the globe. By the way, yuan is the third largest trading currency of the globe as of now, which is really a big achievement for China. To be honest, regarding India, I strongly feel that virus is definitely a constraint. 32 plus countries already reported the new strain of virus. As we speak, around 83 million confirmed cases worldwide and 1.8 million deaths, and around 2.22 million cases are struggling. Some are critical, some are okay. I looked at the last 3 days of data. In last 3 days of data, on an average note, around 500k infected patients every day. 500k means that by end of January, the world would be crossing around 100 million COVID cases. 100 million is definitely a big number. So we needs to be very, very careful, guys. I see that markets will collapse at any given point of time. And this time the collapse would be much higher in size and gravity than we saw in March 2020. And I will not be surprised that trillions and trillions worth of the wealth across the globe in different markets like Standard & Poor, Asia, Vietnam, India, Singapore, Thailand, Hong Kong, Europe, Russia and all would erode. So retail investors needs to be really very careful in 2021 in equities as well as commodities. But if we lose our patience, then I'm telling you that we are bound to lose so much. But I'm sure that majority of the people, those who claim to be an investor, they don't have any patience. And that is the reason they tend to lose. Hindi media and several people on the YouTube are shooting videos like, if you buy this, it would be 5 times after 4 years, it would be 10 times after 4 years. Come on, guys. If you knew that it would be 10 times after 4 years that much, then why don't you buy yourself? That is more important thing. This is what I would like to say. I feel that 2021 would really be very, very critical and we need to very, very careful and alert. I will not be surprised that like Dr. Fauci, who is basically a renowned doctor in White House, he already warned US. I will not be surprised if things will turn haywire from here. But we need to be very, very careful. That's my message to 2021. 2021 would definitely be remembered as a year of swings. And those who hold the patience will handle the swing well. And those who do not hold the patience will definitely lose the swing. This is my message. Now I open the forum for 10 minutes. Any Q&A, feel free, ask any questions, 10 minutes maximum. WhatsApp number is 9818485155. WhatsApp number is 9818485155. Please ask your questions, feel free. I'm sorry, there are many stocks in India, they are getting reasonably and unreasonably high. I'm sorry, I'm not here to comment on these stocks. I have already told many people that if you are going to be buying any stock, then you need to buy on intrinsic value. If the stock is closer to intrinsic value, then you buy it. If the stock is not closer to intrinsic value, then you should not buy this, as simple as that. About views on the recently launched IPO, then I feel that they are heavily priced and one needs to stay away from them, to be very honest, and we need to wait by the time they come at their intrinsic value. If they come to their intrinsic value, then we should definitely buy them, but currently they are far away from their intrinsic value. I think there are many logistic stocks we have in India, to be honest. And out of these many logistic stocks, majority of the logistic stocks are on the loss-making side, which precisely means that even if I buy these logistic stocks now, those who are, of course, getting a lot of hype by Hindi media, but they are on the loss-making side, then I will not be making any money. I strongly feel that if we are buying any logistic stocks, it has to be profitable. Even if the media is giving so much hype and everything, I don't think that if it is not a loss making stock, if it is a loss making stock, we should not buy that. About Glenmark Pharma, then I think Glenmark Pharma sold some part of their business to another company, and most of the pharma companies are doing consolidation now because COVID-19 fever is over. I'm not saying COVID-19 is over, COVID-19 fever is over, which means that the many pharmaceutical companies were riding high that they would be making the vaccine. But now it is very clear that only and only foreign companies made the vaccine, and few Indian pharmaceutical companies are entering into the distribution agreements. But still, I feel that the foreign counterparts of the Indian counterparts of the foreign pharmaceutical sector stocks, pharmaceutical stocks are very competitive in nature, to be very honest. And I think, but they are far away from intrinsic value. We need to do the complete research. NBCC, I have no comments, but we are doing our research on NBCC. NBCC is definitely a good stock, but we need to do our complete research. Gold, I have already said that. The gold, Friday was holiday, today is Saturday, tomorrow is Sunday. And when on Monday market, the gold will open, especially in Singapore, I'm expecting gold to touch probably 1900. If gold would be touching 1900 in spot markets, then I think the next level of gold would be 1950 and maybe more. But having said that, apart from COVID-19 and the new strain of virus in UK, there are many other reasons for the gold to reach to 2000. By the way, if this situation worsens, assuming this time, then many countries of the globe do not have money to sustain, because majority of the countries already done with majority of the countries are done with the quantitative easing. And if this time the mess happens, then I really doubt that any country in the world is in a position to go ahead with a quantitative easing. Henceforth, the magnitude and the magnitude of the mess would be very high. Well, the question about this Borosil renewable and all, then I have already shot many videos on YouTube and our Takatak and our own app also, that there are many that first of all, the renewable sector in India is getting a super hype, but the reality of the renewable sector is really on the other side. But the hype is like that the renewable sector would be the next e-commerce in India, unfortunately. And I'm sure that many retail investors are buying the renewable sectors, trapping in this hype that it would be the next e-commerce sector in India. So before you buy any renewable sector stock, just look at the balance sheet of that stock. Until otherwise you see the balance sheet of that stock, I really don't think it is a nice idea to buy the renewable sector. I'm not saying Borosil renewable or any other renewable sector stock. Hype is definitely there, and that hype needs to understand very carefully. I'm sorry, I cannot comment on Nifty and Bank Nifty because foreign institutional investors are driving the market. But I strongly feel that foreign institutional investors are having their limit. Being a corporate treasurer, we know how exactly they react. The day foreign institutional investors will stop funding in India, and there are ample of reasons that they stop funding in India because of the COVID-19 virus, the new virus in UK, 32 countries reported the U virus. It is flaring up and many think the markets will crash. We already saw the demo few days ago. As simple as that. About USDINR, I think that it is around 73.07, and we can take a call on USD 73.07 on the buy side, but with a strict stop loss. To be honest, we need to have a very strict stop loss in USDINR. There is a consistent import demand from India from the petroleum and the non-petroleum sector, and this demand has to be met via imports. So USDINR imports would definitely continue, to be honest. But yes, I strongly feel that 73 level is the right time to buy, keeping a strict stop loss, keeping target as 74. I'm sorry if you are asking why the new strain is so dangerous for market, then I fail to understand. You not understood the strain and you not did your research. This new strain is having the R ratio of more than 1. I'm sure that 99% people here not studied about the R ratio. The COVID-19 is having R ratio less than 1, but according to the UK studies, the R ratio of new strain is greater than 1, which is really very, very dangerous. I'm sorry, but we need to do our research very well, because I always stress on the research, but unfortunately people ignore research. About Bajaj Finance, I have no concerns, no comments. But recently there is a study by Einstein Young and many other studies of the non-banking financial corporation pointing to a substantial loss in the NBFCs because of non-performing loans. The top 8 banks of India, they are also facing a huge willful defaulter loans. And I will not be surprised that if the non-banking financial corporation will also face the similar kind of situation. So I'm really very vigilant and alert and careful as far as the non-performing loans are concerned. To be very honest, I'm not like Hindi media who go with emotions, but that way. About Yes Bank, if the market crash, the Yes Bank will also crash. So Yes Bank is not an exception. And by the way, I'm going to be shooting a very important video on the YouTube channel whether Yes Bank is out of woods or not. I really don't think so. That first of all, Yes Bank is not out of woods, number one. More importantly, if market crash, then Yes Bank will also crash. The Yes Bank is not an exception, to be honest. Yes, choice is yours if you wish to hold Yes Bank or not, but Yes Bank requires a huge patience and consistent research. People neither have patience nor they do the research. And more importantly, if the market fall, all bank stocks will fall. And why Yes Bank? Almost every bank stock has to fall, to be honest. I cannot comment on the sale and the different PSU stocks, because one thing I understand without quoting the name, that there are many public sector stocks we have, those who are less than their book value. Suppose the book value is 1 rupee, they are trading at 50 paisa. And once any stock, whether it's a public sector bank or public sector stocks or a private sector or any other thing, if they are trading lesser than the book value, then I'm sorry, there is no point of talking about the intrinsic value. And once there is no point to talk about the intrinsic value, there is no point to talking about that stock. I know that our operators are very capable and handsome people. They know how to give the hype. And once they give the hype, people start buying the stocks and eventually they lose. But people need to understand that if they're buying any stock, is it greater than the book value? If it is greater than the book value, to be honest, then is it greater than the intrinsic value or lesser than the intrinsic value? This is the simplest thing which I'm talking it about. Majority of the public sector stocks are either very close to book value or they are lesser than book value. But we really do not know it about that. I'm going to take the last 2 questions. I'm sorry, sir. You people are putting time domain, whether market would be selling next week, next month and all. No. There is no time domain of the crash. We need to look at markets very sensibly. We need to watch market very sensibly. We need to read, listen, digest all information which is coming in public domain. And then we need to analyze that. I'm sorry, but if we have a mindset that we are going to be, if market would crash next week, next to next week, something like that, this mindset never works up. Mindset, we first need to digest all information. Maybe next week crash will not happen, next to next week crash will happen. But if we look holistically, the whole information, we will get to know that crash is very near. Even US, Mr. Fauci also confirmed that. I'm not surprised that I will get this new strain in the different states of US. We know about UK. We know about, like, Pfizer got approved by, I think, World Health Organization and also by US and UK. But we not saw a substantial rise in the Pfizer afterwards. We not saw a substantial decrease in the COVID-19 cases afterwards. There are many issues. Many issues. We really need to wait. Research is really very important. I'm sorry, I cannot comment whether we need to buy silver or sell silver, but one thing I know that silver is currently around 26.16, and like gold, who is trying to break 1900, silver is also trying to break 27. If silver breaks 27, then I'm sure that silver might be touching 28, probably higher side also, because mess is really on the cards. Gold to silver ratio and gold to silver risk index is really a concern. I'm not sure whether people are following gold to silver ratio and gold to silver risk index. If you wish to have any questions about our news desk, our FNO learnings desk, our penny stock trainings desk, our technical analysis desk, our video trainings, our audio trainings, and hell lot of stuff, you're welcome to WhatsApp at 9818485155. But please be note that 2021 will not be what you are thinking. 2021 would be it would be remembered as a year of swings. Geopolitical issue is important thing. Chinese factor is important thing. There are hell lot of factors we need to consider. Retail investors, or maybe the big investors, needs to have patience. Patience would be virtue in 2021. Apart from patience, we need to have an excellent research who will back our decisions. Volatility would continue, and I'm sure that, strictly speaking from Indian angle, Hindi media will trying hard to push markets on the higher side as against the reality. With this, I would like to wish again a happy new year. I am always with you, would continue to come on an often basis on Facebook. Already on a daily basis, we are shooting videos on YouTube. Have a great time ahead. This is Rahul from Treasury Consulting. Thank you.